Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so it's another fairly boring day on the market today, guys. So we're really quite stuck sideways, and if we have a sort of deep look at this now, where we thought the trend was going to continue, really, we've just gone dead sideways over the last sort of 80 trading days. Really, since early December, late November, there hasn't been much going on overall in our market. Like things are, obviously we've seen a lot of sector switching, and some stocks do well while the stocks pull back. But from an index point of view, we're pretty much stuck sideways. So that's where we're at. There's not much else to say. These are the two key levels around that sort of 666, 6650. We keep holding that as support. And then resistance around this sort of 68.50, but then also around 69. What we're waiting for here is a break either way. I do believe we're going to get a break in the direction of the trend overall. We are back near trend. We are technically in, whether you call it a pennant or an ascending triangle. Both patterns sort of suit what we're seeing here. And yeah, look, this is like a spring, guys. Like the more it goes sideways, the more you're going to get a nice big movement on the other side. But you just don't ever 100% know until you get the breakout. I'm going to make the assumption the breakout will be eventually higher, but it could take months, weeks, days. You just never know until you see the breakout. So it's got to be patient here. There's strategies to take advantage of these types of moves, and we've been already suggesting them to our clients over the last month. The particular option strategy I'm referring to is a short iron condor, where you actually make money from the time decay out of the options. It's a short volatility trade, which means that you want the market to keep going sideways whilst you're in the trade, and you want volatility to keep falling, which is the definition of sideways movement, right? So there's ways of trading this in the short term. There really is, and because XJO has weekly or style options, this is why I'm directing this towards the XJO. These strategies are great here because you got heaps of liquidity to get filled. You got the weekly options to choose from. They're all European, so you don't have to worry about exercise risk. And that's why we do a lot of that type of strategy on the XJO. So something to have a look at, guys. Look, in these sideways environments, it's really important to learn these types of strategies. If you go back in time, you can see, this was another sideways period, and that went over 152 days. Go back in time a bit further. Last time we were up around this 66 level, we were sideways here for roughly 200 days. And in those periods, a lot of stocks go sideways. You can already see ANZ. In current time, you go, all right, well, that's spent 2 weeks going sideways doing nothing. You're not trading directional there, are you? You know what I mean? Not to say there isn't some stocks still moving, like BHP's fallen off a cliff recently. That would have been a good bearish trade, for instance. There's always stocks moving, but there's less of it, right? 80% of the top 200 is just drifting around at the moment, right? It's making it a lot harder to find trades. So from a directional trade point of view, this is why you've got to have those types of strategies up your sleeve. And that's what we lean on in times like this, is those types of option strategies where you can actually profit from a reduction in volatility. You're making money from time decay in the options. Alright, anyway, so that's what we're trading at the moment, guys. Look, we've disconnected from the US markets completely. I think my view's been 100% right when it comes to the US market. I've been extremely bullish on the back of stimulus talks, on the back of vaccine rollouts. All of that sort of stuff is 100% correct, because if you have a look, really, since we've been going sideways, which was roughly, around here, end of November, they've gone up roughly 10%, where our market's gone up maybe 1%, right? So, the sentiment was right. I just thought that normally, if the US market goes up 9%, we're going up at least 5 or 6 or 7%. You know what I mean? Like, we usually go up with them, but not as much, right? In this case, though, it looks like we've missed out on a lot of the party over the last 3 or 4 months, okay? All right, so that's where we're at. Looking at the US market, for me, this looks fairly bullish, okay? I said this in my morning view a number of times. I'm not sure if I said it on this on last week's video or not, but often when the S&P 500 breaks into all-time highs, it will pull back, hold the previous resistance and support, and keep going. There's a bit of a half-truth here, depends on where you draw your line, but it did pull back, okay? Typical reversal pattern, bullish signal. It will probably muck around here for a while, okay? It will probably whipsaw around here for a while before it keeps going higher. But at the end of the day, the trend is up, okay? You've got more and more stimulus down the road. They're now talking about $3 trillion in infrastructure spending. As long as they keep talking about pumping money into these markets, as long as they keep talking about very accommodative central bank policy, the markets aren't going to fall in a large way. Don't get me wrong, there's always a 10% correction around the corner, and we did see a 10% correction in the NASDAQ recently, okay? So that was your 10% correction through there. A 10% correction, we could have one in May, right? Most May, June periods, we have a decent pullback. So, but overall, the longer term view is still bullish until they start rolling back stimulus and start becoming a bit more hawkish. The markets are likely to go higher, okay? So that's where we're at the moment in the way of an overall view. Now, the other thing holding things back, and the reason why the Nasdaq had a big correction, is partly due to bond yields. Now, what are we talking about here? Well, over the past probably 2 months or so, we saw the longer term yield space here rise quite dramatically. Now, when bond yields rise, it means people are selling out of bonds. Okay, so people are exiting the bond space. They're getting their money back in their pockets, going to cash, and moving it to another asset class, whether it be equities, real estate, whatever. Okay, so what that is usually a signal of, when rates are low and bond yields are rising, it means people are pricing in the fact that inflation's coming. So think about it for a moment. A bit of education here, guys. If you're buying a long-term bond, right, risk-free asset they call it, okay, you want to make more than the rate of perceived inflation. Okay, so if inflation is perceived to be at 2%, 2.5%, you need to make that or more for it to be a worthwhile investment. Otherwise, why bother? Okay, because you're still losing. You might as well go to another asset class that will at least give you more than inflation. Okay, and that's the goal here, right? Somebody that has already got millions and millions of dollars and they want something, well, at least as a bare minimum for an investment for them, is they have to make more than inflation, or else they're eroding their fortunes. Okay, so that's the important part here, and that's why you would invest in a bond. Okay, usually in a government risk-free bond, is that you want to make more than inflation. So if the Fed is targeting 2 to 2.5%, where do you think they're going to go? Right? Where do you think these long-term bond yields are going to go? Eventually, they have to go to that inflation rate. Now, what scares people is if the long-term yields go from 1% to 1.8 in a month, right? That's scary because it's a large movement very quickly. What we would want to see moving forward is maybe some yield control. Okay, and this is the next big thing, is whether the Fed will step in the coming period of time and take control here to make sure that those longer term yields don't rise too quickly. The other thing I'll point out is this. Look at the yield curve. Okay, current yield curve, that is a nice healthy steep yield curve. A year ago it was fairly flat, right? It was flatter than that at one stage. Okay, it was so when a flat yield curve is a sign of recession's coming, a steepening yield curve is saying, well, we're in a different cycle altogether, aren't we? Right? We're in a growth boom cycle now. Right? You got inflation will come at some point. But there's no point in selling equities down 10, 20, 30, 50% or getting scared like that in the equity space when the inflation hasn't happened yet. Okay? So for me, I'm still bullish medium to long term because the inflation hasn't happened yet. There is no risk for the next few years of interest rates going up. What the market really wants is yield control. They want to know the Fed is going to step in if everybody rushes to the sell button at the same time to get out of the longer term bond space. All right, so they want to know the Fed's going to step in. That's the big thing. Okay, if the market gets that, then I believe we're going to run up a lot more than what we've been seeing recently, especially for the US markets. Our market will eventually follow. We can't resist. The more the US market goes up, the more we will climb. So the big thing for me, and this is where there's good and bad here, right? Biden's looking to spend another $3 trillion. Okay, the last bits of stimulus that we've been seeing, physical stimulus that we've been seeing in the US, is more of a band-aid on the problems that have come from COVID, right? People, unemployed people need money. Okay, that's more of an aid package rather than a stimulus package, right? If you really think about it. This is more of a stimulus package, okay? This will help the US economy get back to some form of norm, right? This will help boost the economy a bit, get jobs going, all that sort of stuff. That's the idea of this bill. So for me, it's extremely positive, right? I keep saying it, the more they look to spend, the more the US market will go up, all right? So they've got everything now. The US market's got everything. It just needs to get over this whole bond thing, right? You've got vaccines that have come that are getting rolled out. You've got more money being pumped into the system. You've got a leader now that can take control, get things through the House and through the Senate, and pass it in. Right, we saw the proof of that in the last aid package that came out. So the US market right this second has pretty much everything they want. They just need to get past this perceived problem of inflation and bonds. It's going to take a while to solve that problem in the short term. So just watch that space. If the 10-year bonds rise hard, you know what's going to happen. The NASDAQ will sell again. Okay, so in the short term, you just got to watch that dynamic play out and just wait for a resolution and a break higher. So, but locally, it's kind of a little bit different. Locally, there's a few things holding us back, right? One's the view of what's happening with iron ore. Okay, so China's been wanting to reduce pollution, therefore telling their steel mills to cut back production. Therefore, the demand of iron ore will probably go down a little bit, and iron ore, which has been sitting at ridiculous highs, is likely to come lower, right? That's the view, right? I think it's going to be a slower play out than that, okay? But, nonetheless, our miners have pulled back a little bit. That's one of the reasons why we've just been chilling out a bit. The other thing, I think people might be a little bit reluctant to trade the US or buy the Australian market at these levels, because our stimulus is running out. Our government is going to start pulling back, right, reining it in a little bit. You got keepers and seekers that are pretty much going to stop at the end of the month. I believe there's still some of the travel industry that's going to keep going with the keepers. But nonetheless, a lot of the little retail people and that, they're still closing their doors, guys. You walk around the Melbourne CBD, you got closing down sales still going on around the office areas. Cafes that were open 2 weeks ago aren't open this week, right? They're gone. Okay, so we haven't seen. I think they're removing, in some parts of the economy, they're removing keepers layouts a little bit too early. There's obviously a lot of companies out there that don't need it, but there's a lot of small businesses that still do. So there's still going to be that period of time where you go, okay, well, where do you prefer to put your money? Australian market where the stimulus is tapering off, or would you prefer to go to the US market where they're just warming up? Right? There's another $3 trillion coming down the line, right? So I think there's a bit of that going on as well. You need the miners to join in on the fun. If the miners join in and jump again, look, the XO will likely break higher at that point of time. Banks will likely remain strong in Australia because of the strong yield curve and the very, very strong housing market right now. Okay, so the banks are looking pretty good still, whereas miners and that have pulled right back. If they catch a bid, that's what we need. Okay, all right. So look, that's a bit of an overview of where we're at. Look, sideways is generally going to be the theme here for a little bit longer, especially in our market. The US is likely to break higher at some point, especially as they heat up the talks around infrastructure spending. $3 trillion, that's going to be very, very attractive for people to be investing and wanting to buy more US equities, guys. Right? There's just no doubt about that medium term. So. Look, that's where we're at, guys. Okay, whippy market, a lot going on in China as well. I can be here all day, so I'll wrap it up. It is a bit of a long video, so sorry about that. But there's a bit to talk about, but nothing going on, right? So there's heaps going on, but nothing in a sense in the market, because people are sort of a bit cautious and going, oh, well, we've run hard. What's next? You know what I mean? What's that going to be the next trigger to push it higher or lower? That's where we're at. Thank you for listening in. Take care, and bye for now.